All right, let's get this party started. Good morning, traders and investors. I'm Noble BM, bringing you another weekly recap from the market. We're going to go over indices, macro, policy, sector rotation, earnings breakdown, gold and silver, where does it go? A bit of ETF risk in the market, and of course, my trades. And I have a special surprise for you regarding options. Okay, so trades on stocks and some option plays that I did. Let's jump straight into it. First, let's jump into the major indices here because we have our S&P having a bit of a pullback last week. But of course, as soon as that happened, well, buyers jumped in and the market did not crash. So we have here the last Friday, which had a bit of a pullback, and then Monday the pullback got bought. Tuesday it was in between. Wednesday we went above the 20. So this blue line right here on the S&P, we went above the 20-day moving average. On Tuesday, we went underneath of it. On Friday, we start out heavy in minus, and then we break out over the 20-day, ending right here, 6,644. Although in the futures, you can see here, 6,702. So the market in the after hours went a little bit higher. The Nasdaq ended kind of the same with 0.65 points in the positive. It pulled back then in the after hours, so that's pretty strange. And the Dow Jones also, go away cat, ending here in the positive. Now, the wicks, let's just take a look at this was interesting. We did have not a major wicks jump and then a big pullback in the wicks, and maybe this is done. I am expecting a very last push here from the S&P 500 or the Nasdaq actually to the downside, and then I think we're kind of done with this correction, although I did expect for a bit more. So only barely touching the 50-day on the S&P was not that much, not that big of a pullback. Just take a look at April. This was a major pullback. Or also take a look at last April 2024, also great pullback. Take a look at August, another pullback that both of them violated the 100-day, or one of them violated the 100-day moving average and the other one only touching it. So are we through this correction phase is the question here. Now, I don't think so. I still think that we are going to have a bit of a more of a pullback, but still pretty optimistic for the end of the year. Really optimistic. Let me just a little bit down here. Really optimistic for the end of the year. We are going to end in green. Which sectors will end in green? We're going to come to that just in a couple of seconds. So also let's take a look at gold, silver, and Bitcoin. First, let's take a look at gold. Gold touching, as I said, we were following along the previous videos, touching the 227 Fibonacci extension. Now, I was warning here that after this touch will happen, it's going to have a bit of a pullback. So it did, it went over the 4,000, touch the 4,400. Is this going to go to 5,000? I don't think so. So it could happen. The probabilities, although, are getting lower and lower. And we saw here on Friday, money moving out of gold. And also, let's jump to silver now, moving out of silver and going into stocks. Now, for silver, on the other hand, there may be a slight chance that it could touch the 227 Fibonacci extension. Although, I must say, if you want to risk it, be my guest. I'm out of this trade. I left silver. I'm going to also show you a little bit of option plays on it. I'm done with silver. The last thing that is interesting is copper. After it's had a little bit of a pullback here, is starting to do just a limbo. Because copper is actually where you will thinking, why isn't this playing out? AI, centers being built. Why isn't copper up here like it was last time? Well, this was a fluke. So this right here on July the 8th of July, this was Trump. This was Trump implementing tariffs. And I was also playing here short, and then I gave up somewhere here, I believe. And then, well, this happened. And, well, you know, could have made a lot of money, did not make it. If you've been watching my previous episodes, you already know about this short that I did. Okay, got out of that. Pretty good, but not. If I would have held on to the 30th of July, man, would I have made some money. But it didn't. So, lesson learned. Okay, now let's jump to oil. Take a look at oil. I was telling you for a long time ago that I could see oil in the lower 50s. Now, we are now in the mid 50s. Also, oil kind of reached the 56. Somewhere down here at 54, I think, is that's just it. I don't think oil is going to get any lower than this. Now, with this being said, I would wait. I would wait for oil. If you want to buy it for here, and I'm talking about a higher oil price. If you want to buy it here, then do take into consideration a little bit of volatility. Because I would say, maybe not this year, but next year, we could or we should see oil back in its 70, 80s again, somewhere up here. This is not going to go to crazy pandemic levels, but somewhere in the 70, 80s range, oil should have its day again. Now, do you want to play oil? Or do you want to play Exxon or Chevron or maybe Schlumberger? It's up to you. Or maybe Halliburton. It's really up to you how you want to play this. But at these levels, oil is kind of getting into a buy. Now, if you're going to see one last pullback in the overbought territory, I will buy oil. What you're going to do, that's up to you. This is not financial advice. I'm not a financial advisor. This is only educational and entertainment. Put on a hat, magic hat, because I'm going to pull out rabbits out of it. So just take a look at this. Take a good look at this chart. Take a look at the macro environment. Oil should have had its retracement, and that should be it for oil. Like any lower than this, it's just not going to happen. Okay, we talked about oil. We talked about everything except in Bitcoin. Let's take a look at Bitcoin. I'm not going to talk about anything else. I know. There's a lot of you asking about the other. What about Dogecoin? What about Ethereum? Maybe Ethereum is going to have its day, but Bitcoin is starting to look juicy here. Now, because Bitcoin has had this kind of a retracement, this kind of risk off selling, I'm expecting another sector to have the same thing, and then we will be done with the correction. So you could play Bitcoin in the IBIT. Maybe try it here. Buy a little bit. Let's see if it has its leg up. Maybe it's going to have a much bigger retracement. But if you're going to take a look here, the last time we had this pullback on oil from 2024 jumped up, so same thing that it did here, and went back down again, found its support somewhere in September, then one last pullback in October, and then winter came, and when winter is coming, Bitcoin is also going up. Not always, but let's see what will happen. I still think we're going to chop around here, and then we're going to have another leg higher in Bitcoin. But if you're looking now for doubling Bitcoin. So we had here, and just see, we had here Bitcoin at 40,000, went up to 70, went down to 50, went up to 100, came down to 75, went up to 120. So the next leg higher, let's just do a Fibonacci extension here on Bitcoin. Let's do a technical analysis, which could mean absolutely nothing. Oh, sorry, I did the wrong one. There we go. Low, high, this low in, I don't know. But definitely, hey, Bitcoin at 140,000 would be the next leg up, and then 170,000, the very next leg up. Let me just demonstrate this. Pull back. I think this ended here, here, and here. So it went above the 61. Did not touch the 127. Then another one here in the last major retracement. I think this is the bottom. This went above the 61, stopped somewhere in the middle. So we can see, I don't want to be negative. Please, all you Bitcoin holders out there, I'm also a Bitcoin holder, but I think Bitcoin is starting to lose steam. So the question is Ethereum the next one? Could this be Ethereum's day? I don't know. I honestly don't know. But what I'm going to tell you is that Bitcoin had a story. Now that story has played out. Also, we can see on the volatility of Bitcoin, go back to Bitcoin, not that volatile anymore. Okay, just be careful with it. We do not know, story-wise, if Bitcoin is going to have another major breakthrough. So if you have Bitcoin, hold it. If you already took some profits, perfect. There are going to be other opportunities in the market. In the crypto sector, on the other hand, maybe had a little bit of ether, and that's it for me. I'm tapped out with anything else. Okay? It's just the story of Bitcoin is the following. Only going to be 21 million. That's it. No inflation. That's it. That's the story of Bitcoin. Okay. Anything else, and nobody holds it. There's no CEO of Bitcoin. You cannot call Bitcoin. Hey, what's up? They're not going to have an earnings call. Ethereum, on the other hand, there's a company. Okay, there is a CEO. I'm not going to invest in something that doesn't even have earnings. Okay, Bitcoin does not have earnings, but that's the idea after. But Ethereum does have some kind of, because you can stack it. Okay, stake it, sorry. So you can stake your Ethereum and get money for that. So they do have earnings. Okay, that's it for this part. Now let's move into macroeconomic and policy overview. We had last week absolutely nothing. We had nothing. Fed chair spoke and it was he had a speech. That's it. So the US government is still shut down. We are in the third week now, still blocking key data like jobs, retails, and PMI. So this is what I'm waiting for, that the data is going to come out and it's going to be a flush in the market. It's going to be bought up. Maybe wait 3 days, magic free. Wait 3 days, buy that dip, and move into the sunset, which is the Santa Claus rally, January, February, and let's see how 2026 will roll out there. Also, fund flows, roughly 1 billion returned on the US equities, first inflow since August. Regional banks, there was a little bit of story in the regional banks. Let's just see here. Fears on BBC, fears over US bank causes stock market jitters. Now, so what happened here? As Jamie Dimon says, there's never just one roach. I think maybe there's one more roach, maybe there are 2 roaches, but this is not going to influence the stock market that much. So regional bank losses in Dan's Bancorp and Western Alliance related with a credit market. So the credit risk, sort of a bit of a credit risk, but major banks reassured invested with solid results. So everything is okay in the banking system. Take care with small regional banks. There is an M&A, mergers and acquisition happening there. So maybe there are even some kind of possibilities there in a couple of banks that you could buy one and it's going to be bought out, like we have Comerica was bought out. And if you hold Comerica, then hey, you got a payday. It jumped over 10% on that day, depending on where your entry price was, because it's going to be bought for 0 point something shares of of the company buying it. So you're going to get shares from them, but if you sold out of your Comerica shares, then you made a little bit of money. Okay, ETF bubbling. Next topic, ETF bubble talks. So regulators are warning about rapid ETF issuance and leverage. So they're handing out ETFs hand over fist. They just inventing ETFs. There's going to be wondering when there's going to be a ETF for ETFs. That's an idea. The ETF that's going to track the ETFs. So you're going to bundle up ETFs in ETFs, and we're going to have the mortgage scenario for 2007, 2008 once more. We're just going to create those tranches. Remember that tranches that Jenga seen from the movie The Big Short? That's what I'm waiting for. ETFs in ETFs, which are bundled up in other ETFs. That's going to be perfect for the next bubble. When that is going to pop, I'm going to be there to buy that dip and also protect the wealth, because that's what we're doing here, protecting our wealth with, you guessed it, a chart now right here, guessed it, with the dollar, actually the Dixie. There it is. Just take a look at the dollar right here. So if this is not a scenario for dollar breakthrough, then I don't know what is. Let's just do a Fibonacci extension on this little fellow. So if you would be a buyer at 100 or right now of the dollar, you could have an upside of, well, a major upside. Oh, even if it's going to only surpass a 61 retracement or extension, because it's a Fibonacci extension actually, you would be in the money, baby. In the money. Just buy TLTs, hold on, and let them ride. Sell them then when rates are underneath of 2. Everything underneath of 2 would be gold, more than gold, bonds even. Oh yeah, if you had astonishing good years in gold, maybe take some profits, buy a little bit of TLTs, this little fellow right here, iShares bonds, you're going to get your dividend nicely. It has had a choppy 5 years, but this was money printing at its peak, and if you sold this peak, you had made your money. Now, this, of course, went down in the last 5 years, but I'm seeing here the next leg up, ladies and gentlemen. I'm seeing here the biggest possible leg up of all times in the financial system, or in the bond system, not in the financial system. Okay, let's go over a couple of sectors. So we're going to go here to Spider. And year to date, we can see that the biggest winner was, of course, technology. Technology with the biggest holder being NVIDIA. So 14.46% here in NVIDIA, then Microsoft with 12.35%, Apple of 12.11%, and then Broadcom climbed up there, 5.31%, Oracle, Palantir, Advanced Micro Devices, AMD, Cisco Systems, IBM, so on and so on. Okay, major winner. Next major winner Utilities. One of the biggest winners, NextEra Energy. After that, Constellation Energy, Soft & Core, Duke Energy, Vistra Corp, so far and so on. Next winner in this sector was, of course, communication services, with leaders in Meta and Google, Netflix, Warner Bros. Discovery, Take-Two Interactive, gaming. Electronic Arts, which is now gone, is going to be taken private. It was bought out. We had Electronic Arts made a huge payday there, and T-Mobile, so far and so on. But let's take a look at the laggers. Energy, 0.37 year to date, okay? Because on the year, it's negative. Materials, negative. Real estate, negative. And healthcare, also negative. Year to date, healthcare is kind of trying to break out there. And if you ask me, the next, as I said also in my oil chart there, energy is one of them, and healthcare is also one of them. Now, don't underestimate financials, and also do not underestimate materials. I can still see here a major breakthrough. Now, real estate, because you're saying, hey, real estate is 3.37. Maybe this is a major play with Welltower, Prologis, American Tower, Equinox, so far and so on. Major companies. I would say wait, because we still have to have our rates really cut down. So until the next Fed chair in spring is going to come, I would wait just a little bit with real estate. Okay, that's it for the sector analysis. Now let's go over, one last thing regarding that that little buy now pay later crisis. PayPal sold to KKR 44 billion of its loans, loans in which were 44 billion. So PayPal had loans from us, and they sold those loans for profit probably to KKR. KKR now having your loan. So if you had a loan, a buy now pay later, a loan to PayPal, now KKR owns that. So why did PayPal sell those profitable loans? Well, I believe they know something that we do not. So I don't tell you to short Klarna, but it's not the worst idea on the planet here. Okay, now let's jump to earnings. First earnings, JPMorgan. JPMorgan reported earnings on the 14th of October, beat on EPS, beat on revenue, strong loan growth, trending income, dividend maintained. Excellent company. Jamie Dimon came up with this cockroach remark. Nevertheless, down. Why is it down? Well, it was up, just having a natural retracement here. Now, where will this end? I don't know, but I'm looking forward to buying JPMorgan. Also, let's go to the next one. Goldman Sachs. Go away, cat. Goldman Sachs also beating expectations. Major beat here, 11% and 7.5% on the revenue. And most of them came from wealth management, IFCC, trading rebound. And if you're doing that merger and acquisitions play, Goldman Sachs is your boy right there. I will be buying Goldman Sachs as soon as I see fit for it. Next one, Citigroup. Citi also excellent earnings. Consumer lending is steady. Deposits are solid. But now I would say, am I a bold buyer of Citigroup? Let's just take a look. When in doubt, let's zoom out, because this is a 1-year chart. Let's zoom out to all time. Okay. And we can see that Citigroup at 97 is, lower than 550 in 2009. So if you had bought, or 2007, sorry about that. But if you bought Citigroup, you're down, well, a lot of percent. So let's just say, let's wait for Citigroup. Let's Citigroup do its due diligence, or not its due diligence. Oh, you should do your due diligence. Let Citigroup do its thing and prove to us that, because there were one of them that had bad loans, the financial crisis, and well, you can just see that people just do not trust them anymore. Let them earn your trust back, I would say. Okay, Wells Fargo, the next one. A slight beat on earnings and revenue, 7.32% and 1.37% on revenue. Now, credit costs up modestly. Net deposits are solid. Wells Fargo, well, let's also zoom out here. I would say the Wells Fargo needs a pullback. And then if you just want to pay dividends, want to have a steady growing bank, this is the one for you. Okay, next up, not a bank, but pharmacy, Johnson & Johnson. One of the dividend kings reported earnings. Now, if I look at the chart, I would say that this little fellow is trying to break out here. Also did break out new all-time highs, but it's trying to have here a major run. And maybe AI will have something to do with it. So if you are in Johnson & Johnson, then good job, hold on to it. I would not be adding to any positions here. Waiting for a pullback, and maybe then great dividend growing company. Not only that is yielding 2.63% dividend right now, it's also constantly growing their dividend. Okay, another one in the pharmaceutical play is Abbott Laboratories reporting earnings, and I would almost say, so missed on earnings there, missed on revenue, but I would almost say that we are now on the daily. Let's go to the weeklies on a 5-year here. This little puppy just touched the 150-day moving average on the weeklies, and I would almost say this is a buy, just almost. Now, this is not that great of a buy as it was right here, but if it touches this little fella right here, so somewhere between the 120 and 113 range dollars per share, I would buy it, and I'm going to buy it. Okay, last but not least, one of the major players out there, one of the more conservative, aggressive players, I would say, ASML. So I already told you that I sold all my complete shares of ASML. Now, why did I do this back then? First of all, it has reached its 61 Fibonacci expansion. The next one would be a doubling of the stock price. So, not quite doubling, but from here, it would have to go up to $1,500 a share. It's at 1,000, excellent share price, and I would expect it's going to jump around here a bit. It's always 20-day moving average. Let's go to the 1 year here chart on the dailies. It's always 20-day moving average. I would expect a retracement here in the next. Actually, this is what I'm expecting. That the financial sector, not the financial, the tech sector is going to have its last pullback. Everybody else had its pullback, and then we're off to the races from there. Now, when the pullback happens, I'm looking at NVDA, I'm looking at ASML, I'm looking at Google, not at AMD. I'm out of that trade, only playing options on that. But for a swing trade or a investment, I'm looking for these companies: Microsoft, AMD, Google, Meta even, ASML, TSMC, no Intel, no way. Hold Intel, had my fair share of struggling there with Intel, hold it almost 2 years, got out of that trade. Whew, thanks God. If Intel is going to have its turnaround, that's it. I don't care. I'm looking for the winners. I want to play with the winners. I don't want to play with the losers. Okay, that's it for earnings. Last but not least, earnings for next week. We're going to start up Monday with one relevant earning here, and that is AGNC investment. So nothing major on Monday, but then on Tuesday, we're going to have Coca-Cola, Lockheed Martin, GE, RTX, 3M, GM, Philip Morris, Nasdaq, Halliburton, and of course, the Danaher Corporation. Now, this is before the bell, and after the bell, we're going to have Netflix, Intuitive, Texas Instrument, and one more bank, Capital One Financials. Then we're going to move on to Wednesday when we got GE Vernova, major player. Now, this is where I'm expecting GE to have a correction, a big pullback, and that is where I'm going to be there with a sniper and taking advantage of that pullback. AT&T, Moody's, Thermo Fisher, Boston Scientific, Hilton. Then after hours, we're going to have Tesla, IBM, SAP, JPMorgan in the gas industry if you're looking forward to that. Now, then on Tuesday, on the 23rd, we're going to have T-Mobile, Blackstone, Honeywell, American Airlines, Union Pacific, and after the bell, Intel. Not interested. Okay, I want to hear what the CEO says. I'm so curious what else is going to say. Hey, everybody gave us money and we did nothing. Ford, and so far and so on. And then we're going to have on Friday, Procter & Gamble. So this is one where I have to say, what the hell, man? What the hell, Procter & Gamble? Yeah. Just what the hell? Okay? What are we doing here? Are people not buying Gillettes anymore? Pampers anymore? What are we doing here? What is this? What is this? What are you trying to prove? You're out? No more safe play with you? Are you really out? Because you're in the resistance zone. If this is going to get any lower, then also if you take a look at the 5-year, it breached the 200-day moving average. The last time it did it, it was the freaking pandemic. No, wait, this is not the pandemic. This was the, yes, pandemic also. This was the financial crunch when they printed money like crazy. So what are we doing here, Procter & Gamble? Are we turning around or not? The fact is that, let's just take a look at their financials, because this is really interesting. Go to the financials. Yeah, dividend 2.79. Maybe this is the big moment to buy everything in Procter & Gamble, but let's take a look at financials. Earnings, down. All of the forecasts are down. So one forecast for Q2 2026, up. Annual expected to be nowhere, even lower. So the expectations are okay, a bit higher than 2025. 2027 to be higher, 2028 to be a bit higher, and 2029 to be the same. So quarterly, we're expecting to go down, and we're expecting to go a bit higher. Revenue also nowhere there. So what is happening now with Procter & Gamble? One of the things that is clear is that they're not growing earnings. That's just clear. The second thing is that there's no reason for us to be buying Procter & Gamble when the clear play for making money, once again, the clear play for making money, where retail investors had a lot to say in this, is the freaking AI play and energy play, which is also the AI play, and the utilities play, which is also the AI play. So this is why Procter & Gamble is just lagging back there. For a long-term investment, 20, 30 years, 10, 20, 30 years, this is time to buy Procter & Gamble actually. So this being said, let's go to the trades. Trades, October, not looking good. We are currently negative $305. And I'm also going to tell you that I'm not done with my shorts. My short position on the S&P, still going, still negative. Still, I'm going to have a big beating in there. So I'm going to take a big beating. That's just the way it is. Last time I had a minus, so I sold half of my position with minus $1,868. Big loss, negating everything that I did in that week. So let's see what I did do this week. Made a couple of trades here. So these are stock trades. I'm going to talk a little bit about options right in the next segment. So let's talk stock trades. AMZN. Sold a little bit of Amazon here on Monday, the 13th of October at a 25.84. Go into October here. In here. So let's take a look at Amazon. Amazon currently thinking about doing nothing. So if you're playing Amazon, this is the big lagger of the Max 7. And I do not know what Amazon is going to do. So it's going to have, I still own a little bit of Amazon. It's one of those, I'm going to surprise to the upside, or it's going to surprise to the downside. I just don't know. So for all you Amazon owners, I have nothing to say. I just don't know. I'm honestly in the dark here with Amazon because they don't have the play on e-commerce anymore. There are a lot of e-commerce stores out there. They don't have the play on AWS anymore. Google and Microsoft are eating their lunch. They don't have any robotics play. So I do not, and they're also just hiring people. So I don't know what to say. There's just no good news. And also there's not enough bad news to say that, hey man, this is the moment to buy Amazon at $213 a share because it's going to be way, way, way up there in the next couple of years. I don't know. I don't know. There's nothing to trigger the next leg up. Okay, let's move on. Next trade, MongoDB. Pick a symbol MB. A little trade here, also on Monday. Most of the trades were on Monday for 29.50. Okay, what is MongoDB? Data center. It's data. So actually what I'm looking for here, for this little puppy to have a major breakout to the upside. Just take a look at this. Bull flag, jumping around here, already in the MACD and also here on the RSI, kind of indicating that it's trying to have the next leg up. So I'm really, really tempted here to buy more MongoDB. This could be a great play for the upside. But this also could have another pullback. Does it have earnings? No, it has its earnings pretty late in like December. So I don't know what the stock is going to do until then. Earnings always pretty good earnings, but it's flapping around there. Just couldn't have its big day. But I would say that this is a bull flag and is going to break up to the upside. When is this going to happen? I don't know. Okay, let's close MongoDB. Let's go to our next trade, which is Uber. 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 On the 13th. Got here a 21.75. Not going to comment on Uber. Let's just take a look at its chart here. MACD, bearish signal. I don't know when this is going to turn around. The same thing everywhere is the same thing. This little range bound, and either stocks are going to go down and then go up, or this is not, I don't know, it's not the moment to buy right here. For a long term, Uber, great company, great technology. I can hardly wait for self-driving cars. They are going to come sooner or later, maybe later because of regulatory stuff and so forth and so on. But they are going to come, and Uber will be the major beneficiary of that. At least one of the major beneficiaries. Let's move on to Robach. So this is kind of the caterpillar of Europe. The symbol XD4 made here a proud 136.70 euros. Let's take a look at Robach. So the play here also. Thanks God I got out of this trade on Monday, 13th. I was thinking about selling this on the 9th. That was Tuesday. Then Friday came. I said, damn it. And then Monday I said, okay, you're gone. Then it went down. Now, could be even a great revenge play here for Strabag. So basically what this company does is build roads, complex roads. mountains, tunnels, everything. That's a very great company. Now, why isn't it having its major moments here? So why is it lagging? Because the construction business is a hard business. Okay, so I'm also in the construction business. It's hard business. It could take years until you realize that you're actually done, and looks like you're in profitable territory. But I don't know. I'm not going to touch Starbucks anymore. Perfect. Let's move on to AMD on the 13th. What did I do? I sold completely out of my AMD shares. I was selling down AMD bit by bit by bit by bit. Now, if you take a look at the chart, AMD still rallied back up there, but no splitting territory. We do have here a bullish flag, new all-time highs. Also is up there in a Fibonacci extension. Really, really up there. Loving it as it's doing here its thing. But what can I say? Oh, wait. I was wrong. What can I say about AMD? That it has had its day, I believe. For it to do a 161 or a 618% tension, man, they have to sell a lot of chips. Because I'm afraid that all of the future sales, all of the future earnings are already baked into this price. Okay? So I don't know. Maybe I'm wrong with AMD. I'm not going to touch this right now. Let's see what the stock does. Next up, NFLX. NFLX. That is Netflix. Netflix sold it on the 13th. Got a proud 80.2. So remember, these are swing trades. These are not long-term holdings. AMD was a long-term holding. This is why I have $1,000 turn on AMD, something like that. Long-ish term holding. Also, Apple, I sold a lot of Apple, a lot of returns there. ASML, over $1,000 return there. And I'm not playing around with that much money, okay? Okie dokie. Yeah, Netflix is going to have its earnings. I have no idea. No idea what the stock is going to do. Still rage bound, still up there, nose bleeding. They did have some kind of news that they're going to take now podcasts. They're going to have a group hub with Spotify and take some podcasts private, so only on Netflix you're going to have access to them. Let's see how this plays out. I still own a little bit of Netflix, okay? This is an earnings play, but only with stock, not with options. Okay, V for Vendetta or Visa. Take a symbol V. Also sold actually completely sold Visa 42.75. Brought in there. No comments on Visa right now. Had its pullback. Is this the time to add to Visa? I don't know. It always, when it hits, it's go here to trading view. When it hits its 200-day moving average, it just bounces back like a cat. Bow! Does not want to go underneath his 200-day moving average. Is this a buy if you want to be a long-term Visa holder? I will say so. Will you make a lot of money? I don't know. Will you make money? Yes, probably. Visa also has dividends, always constantly growing their dividend. So yeah, great stock. Great stock, Visa. Let's go back here. Close this fellow up. Next up, Meta. MetaPlat. The symbol Meta. Sold it on the 13th. Brought in 21.2. No comments on Meta. Maybe they're going to break out here. I don't know. MACD trying to trigger here buy signal. RSI to the upside. Ugh, I don't know what to do. It's tempting, but it also could go down. But it's tempting. Really, really, really tempting. Okay, let's move on here. Let's move up here to one of my favorite stocks. Then where? The symbol as CSU. Hold it on 13. Yes, 138.50. 1 share, because this little puppy is the Berkshire Hathaway of softwares. So what this company does, it actually buys off software companies. So it's it was a $5,264. I don't know. Is this Canadian dollars? These are Canadian. This is a Canadian company. It's also listed on the Canadian Stock Exchange. We are on CSU. Let me see a CSU software. Yeah, so this is not in the Nasdaq or the S&P. This is on the Canadian Stock Exchange. Now I'm waiting for this to have another sell-off. I'm going to buy more Constellation software. Really expensive stock. As you can see here, $3,814 a share. Man, this is an expensive stock. I love this stock. Just love this stock. Okay, now that's it for selling. I also received some dividends on the O. Is Realty Income. Pick a symbol O. I received them on the 15th. Dividends, that is 23.33. And also on Leo Lithium. Now, do not touch this. I don't think that can even grab it anymore. Oh, for cash div also on the 15th of 80.69 because it's done. This stock is being delisted. They're just going to repay now those dividends, and that's it. Okay, so proudly earned $752 net. Okay, not gross. This is after taxes, after everything, net for this week. Pretty good, pretty good. Over our 500. This puts us at a positive October of 446 after having that major pullback here of 488. Great job for you. Also, if you're following along with these trades. Now let's move to another segment, and that is options. So I don't know, I'm still playing around with how I should approach this segment in the future. I want to show you the trade of an option, but the life cycle of an option, actually that's what I'm going to call it, the life cycle of an option. Because it's not like with a stock, buy it and sell it. You do buy and sell options, but let's say you have a strangle, basically a call and put side sell, and you're playing that the price will remain till the expiration date range bound. And I'm mostly a option seller. Okay, so for example, we have here silver. I was talking about silver. I opened a vertical in silver on the right side right here. Hope you can see this. So opened a vertical in silver, a bullish put spread. Basically, open up a like this bullish put spread, sold a put on, where I said on the 47. So let's go up here, show you how I did this. Sold a put on the 47 and bought it back on the 40. It's not even here anymore, on the 47.5. Actually, I did it this way. Sold it on the 47.5 and bought the 47. Okay, so right here, see where I sold it. -1 is the sell. This is the buy. This is a vertical put. Sell a bullish put because I'm expecting that the price is going to go this is downwards, but it's going to up to the 51, 52, and so on, so on, so on. As long as I am right, the price is going up to my expiration date, which is, for example, right here, the 28th of October. In 9 days, I'm going to make money. How much money can I make? Well, maximally $480, and I'm putting up a buying power of 2,807. So it's extracting, you can see my account here, I'm hiding it. And also the maximum loss is $2,020. Now this is dollars, okay, these are not euros. Now, this is how I opened, and I closed by buying this back. So you have to buy this back and sell this, but sold it back. So I opened it up for 0.8485 pence, because this you have to multiply 1,000. This is a future contract. I'm going to also show you in stocks. And so I sold it here and bought it back for 85. So because I bought it back, you have to think about this as as you buy something cheaper and you sell it more expensive, like in stock. Now I sold something expensive and I bought it back cheaper, and the difference is the money that I made, in this case $170. Also I did the same thing on Netflix. This is a bit more complicated play, but first of all, I opened up with a butterfly. Butterfly is my open, and this is also the close. The butterfly also was closed. So I open up a butterfly, which is basically a bearish butterfly, opening up a bullish. Sorry about that. Bullish butterflies. Bought a put, sold 2 puts, and bought a put again. And you can see here on different strike prices. So I bought it on 1,165. Sold it on 1,150, and bought one more on 1,100. Received 650 or 6.57 credits, and this is for what I sold it for, and bought it back for 3.37 credits, and that is why my difference is my profit. See that the red arrow up here is the winner. The green arrow, not the red. Jesus, the green arrow up here is the winner, and it's also closed here, and I got $320 on the share. Then I open up the vertical and open up another vertical. So 2 verticals. I rolled them because now I'm going to show you something. View this trade. So I opened them up. The price got lower. The price got lower once more. And now let me show you the IV. I ranked the implied volatility was low, and then it growth went higher to 35, and then it went even higher, the volatility, and then it went even higher. So this is where is this the 10th? This is where I got a lot of money for rolling on the 10th or on the 1st of October. And on the 1st of October here is where I rolled my position. So I rolled these 2 vertical spreads upwards, received credit, and then I closed my position because at the end you have to take this sum of these credits and close everything for the sum of this credit. So at the end of the day, I had $224 in profit, bringing me up to, from first, this was where I open and close the butterfly, then 7th, and on the 10th, I closed these two verticals, meaning that I made $544 in, I just counted, 10 days. Okay. Now, I have multiple examples like this, and I'm going to work on what is the best way to bring you value and showing you these trades. I haven't figured it out yet, so I'm still working on it. Let me hear down in the comments below, what do you think about options, how I should present them to you. If you want to learn more about options, I'm going to do a couple of videos also on explaining options. Okay, with this being said, hope you have fun. Like and subscribe. Stay safe out there. I'm Norbert Menhardt, protecting wealth right here at Wealth Down. Catch you next time. Bye-bye. Bye-bye.